Stock market for beginners. How beginners can start investing step by step. Welcome to our channel. In today's video, we're diving into the exciting world of stock market investing, specifically designed for beginners. If you've ever wondered how to grow your wealth through stocks, you're in the right place. We'll cover the basics of what the stock market is, how it works, and why it's a crucial tool for building financial security. We'll also discuss key concepts like stocks, dividends, and market trends, all in a way that's easy to understand. By the end of this video, you'll have a solid foundation to start your investing journey. So, grab a notebook and let's get started on your path to financial empowerment. Understanding the stock market. The stock market is a platform where investors buy and sell shares of publicly traded companies. When you purchase a stock, you're essentially buying a small piece of that company, known as a share. Key exchanges, like the New York Stock Exchange and NASDAQ, facilitate these transactions, providing a marketplace for buyers and sellers. The stock market plays a vital role in the economy by enabling companies to raise capital for growth, while giving investors the opportunity to earn returns on their investments. Buying and selling stocks involves placing orders through a brokerage, which executes trades based on current market prices. Understanding these fundamentals is essential for anyone looking to navigate the world of investing successfully. Setting investment goals. Setting realistic investment goals is crucial for your financial journey. Start by defining your financial objectives, whether it's saving for retirement, buying a home, or funding education. Understanding your time horizon is essential. Are you investing for the short term or the long term? This will influence your investment choices. Additionally, assess your risk tolerance. How much risk are you comfortable taking? This will help you determine the types of investments that suit you best. Once you have a clear understanding of your goals, create a structured plan to achieve them. This plan should outline your investment strategy, including how much to invest and when to review your progress. With clear goals, you'll be better equipped to navigate the stock market confidently. Choosing the right brokerage. Selecting the right brokerage is a key step in your investing journey. There are several types of brokerages available, including full-service brokers, discount brokers, and online trading platforms. Full-service brokers offer personalized advice, but often come with higher fees, while discount brokers provide essential services at lower costs. When choosing a brokerage, consider factors like trading fees, account minimums, and the range of services offered, such as research tools and educational resources. User experience is also important. A user-friendly platform can make investing much easier. Take the time to research and compare different options to find a brokerage that aligns with your investment goals and preferences.
Making an informed choice will set you up for success in the stock market.
Researching stocks. Researching and analyzing stocks is essential for making informed investment decisions. Start by understanding two key concepts: fundamental analysis and technical analysis. Fundamental analysis involves evaluating a company's financial health, including its earnings, revenue, and growth potential. On the other hand, technical analysis focuses on price movements and trading volumes to identify patterns and trends. Reliable sources for stock information include financial news websites, company earnings reports, and stock market apps. Additionally, pay attention to company performance metrics such as profit margins and return on equity, as well as broader market trends that can impact stock prices. By combining these approaches, you'll gain a comprehensive understanding of potential investments, helping you make smarter choices in the stock market. Building a diversified portfolio. Diversification is a crucial strategy in investing that helps reduce risk. By spreading your investments across various asset classes, you can minimize the impact of a poor-performing investment on your overall portfolio. Consider including a mix of stocks, bonds, real estate, and even commodities to create a balanced approach. Each asset class reacts differently to market conditions, which can help stabilize your returns. Additionally, it's important to regularly review and adjust your portfolio to ensure it aligns with your investment goals and risk tolerance. Market conditions change, and so do your financial needs. By maintaining a diversified portfolio and making necessary adjustments, you can enhance your chances of achieving long-term financial success while managing risk effectively. Investing strategies for beginners. As a new investor, adopting effective strategies can set you on the path to success. One popular approach is dollar-cost averaging, where you invest a fixed amount regularly, regardless of market conditions. This strategy helps reduce the impact of volatility and lowers the average cost of your investments over time. Another strategy is value investing, which involves identifying undervalued stocks with strong fundamentals that have the potential for growth. It's essential to maintain a long-term perspective. Investing is not a sprint, but a marathon. Avoid the temptation to make impulsive decisions based on market fluctuations. Instead, stick to your strategy and remain disciplined, as emotional trading can lead to costly mistakes. With patience and a solid plan, you can achieve your financial goals. Monitoring and adjusting investments. Monitoring your investments is vital for ensuring they align with your financial goals. Regularly tracking performance allows you to identify which assets are thriving and which may need attention. It's important to review your portfolio at least quarterly, but more frequent checks can help you stay informed about market changes. When considering adjustments, look for signs such as significant underperformance or shifts in your financial objectives. You might decide to rebalance your portfolio by selling overperforming assets and buying underperforming ones to maintain your desired asset allocation. Regular reviews not only help you stay aligned with your investment goals, but also allow you to adapt to changing market conditions. By staying proactive, you can enhance your investment strategy and work towards achieving long-term success. Common mistakes to avoid. As a new investor, it's crucial to be aware of common pitfalls that can derail your financial journey. One major danger is emotional investing. Making decisions based on fear or greed can lead to costly mistakes. Similarly, trying to time the market often results in missed opportunities and increased risk. Avoid the temptation to chase trends without conducting thorough research, as this can lead to investing in overhyped stocks that may not deliver long-term value. Instead, focus on building a solid investment strategy based on your goals and risk tolerance. Staying informed and educated about market trends, economic indicators, and company fundamentals will empower you to make sound decisions. By avoiding these common mistakes, you can enhance your chances of investment success. In this video, we've covered essential aspects of stock market investing for beginners. We emphasize the importance of education and research, highlighting how understanding key concepts can empower you to make informed decisions. Setting realistic investment goals, choosing the right brokerage, and building a diversified portfolio are crucial steps in your journey. Remember, effective strategies like dollar-cost averaging and value investing can help you navigate the market successfully. Now it's time to take action and start your investment journey with confidence. If you found this video helpful, please subscribe to our channel, like this video, and share it with others who might benefit. Stay tuned for more valuable content to help you achieve your financial goals.